Welcome everyone to IBD's Option of the Day. I'm Chris Gessel, Chief Content Officer of Investors Business Daily. And with me today is my good friend, Harold Morris, Senior Product Coach at MarketSmith. And Harold, today we're going to look at UPS, United Parcel Service. And tell me, what's your strategy with this stock and how are we going to handle it?
Yeah, so I'm bearish on UPS. In addition to that, I was looking at some consumer confidence charts, and those charts look a lot like UPS. So currently, UPS has been testing the 50-day moving average, and I just believe that it's going to fail that test and make a move to the downside. So we're going to be we're going to be buying a debit spread on UPS.
Okay, and what type of options, calls or puts on this debit spread?
This is going to be on the put side. So we're going to be looking at the puts and structuring a debit spread using using puts.
All right. Well, let's walk through the trade and explain all the benefits and risks.
All right. So here we are in Thinkorswim. I've got UPS here. You can also see it up there, and we're going to go 49 days out. I like to give myself some time for the trade to work out. So I'm in the February expiration. So I just click on that. And again, we have calls on this side, puts on this side. So I'm going to be doing a in the money debit spread. So the black shaded area, the black shaded area is out of the money. You've got in the money on the put side here. So I'm going to buy the 165 strike. So I'm going to hover my mouse on that, click it. So I'm buying the 165, and then for protection, I'm going to be selling the 160 strike. So I hold my shift key down, it's my control key down, and there we have the trade there. So again, here is the trade setup here, selling the 160 put, and then buying the 165 put. That's going to cost us $1.40. Yeah, so I'm going to click on this lock just to lock in so we can look at the numbers. Go down here to click on confirm and send. And then here are the numbers. So first thing I typically look at is my break even. Yeah, so the break even, I like it when it's below the stock price. So 163.60, the stock is at 174. So break even well below that. Here's my max profit at 360 and my max loss. My max loss is basically the debit that I paid for the stock. So let's take a look at the risk graph. So I'm gonna click on that, and then anywhere on the trade setup, I can just do a right click with my mouse and then left click on analyze trade. And then here are the numbers here. So here's the trade setup. We are locked in. If you're doing this on your own Thinkorswim, always make sure that this lock is locked here. And we can look at the numbers here. So this tells me what UPS is going to do if it goes up 10% or if it goes down 10%. So if it goes up, that's going to go work against us. Now, this is just showing what's going to happen today. So if we went up 10% today, okay, of course, we'll be at a loss. This is a bearish trade. We want the trade to go down. So if it goes down 10%, then we're going to be profitable on this trade. If I want to see what happens, say 2 weeks from now, first off, I can change this here. I want to change that to single, and then I'm going to change this date here. So I click on that, and 2 weeks from today, we're looking at, so that's going to be January 13th. And if I click on that, then I can see the numbers here. So if we're up 10%, I'm going to change this to +7 because using our rules, our CANSOM rules, we like to get out at no later than 7. But in this market, I'm going to use 5%. So I'm going to change this to 5%. 5, and then we can leave that at 10, and we can look at the numbers. So this is theoretically what could happen 2 weeks from now with our P&L. But pretty much that would be a very profitable trade in UPS if it works in our direction, in our favor.
So it being up 5%, that would be 183 or so. So that would, on the chart, you would be well above the 21 day, you would actually be over the 200 day. So that would be a very clear sign that the trade's not working, which is kind of interesting to see that you'd only have a fairly small loss even if the stock retakes the 200 day.
Yeah. So that's a great point. And you could always say, well, okay, or that's 5%. That's if it goes up 5%, we're at a 5% loss. I may not want to wait there. I just might put that at 3%. And so, as you mentioned, so here's where you got to look at the chart, look at trade. I can just put this here at 3% because you mentioned that, we could, if we get up above the 200 day, well, I don't want to wait that. The trade is already working against me. I want to cut my losses as soon as possible. So you could always play around these numbers because, again, we haven't placed a trade yet. So we're just doing an analysis and see, how this trade is going to work. And again, we're also looking at 2 weeks into the future here. So we kind of get a glimpse as to what could possibly happen with this bearish trade on UPS.
All right. Well, this looks like again another high probability trade, especially given what the market is like right now and how UPS is acting. And if it does retake the 21-day moving average, that's the green line here on this chart, it would be a sign that the trade is not going the way you expected, and you would get out with a very small loss.
Yeah, absolutely.
Thank you, everyone, and we'll see you next week.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.